My name is Hannah Smolinski, and I own Brighten Up Financial. And one of the things that I do for my clients is I help them create cash forecasts. So in small business, one of the most important things that we have is our cash to help us accomplish our goals and to just keep the business running. So I wanted to put together a weekly forecast. So I'm actually working on a client scenario right now, and I've changed some of the facts and figures so that this is an anonymous business, but I do want to give it like a pretty real world example of what's going on. So the facts and figures are close, but obviously no names are being described here. So I just wanted to go over what I'm going to do, and then we'll walk through a forecast, a development of a forecast. And so I'll just walk through the scenario. So I just kind of jotted down some notes here. So this company is a service-based business, and they produce revenue on a daily basis from serving clients, and they get that money a couple days after they take the credit card from the client. So they charge the credit card, and then they receive that amount over the next 1 to 2 to 3 business days, kind of depending on the timing. So they receive money basically every day. So this would be pretty similar to like any storefront type business where you are getting client revenue on a regular basis. So people who are on contracts who do monthly billing, this forecast would look different. But I'm doing this on a weekly basis because of this consistent revenue and the fact that it's coming in. Basically every business day they have some money coming in. So consistent basis. Cash flow is pretty predictable. They actually have a software system that helps them understand their bookings through the next month, so they can project out what they think they will be able to bring in the next month, which is pretty nice. Whenever you have that type of clarity, it is a good thing for forecasting. Rent is paid monthly in 2 different locations. They do have some debt, and debt reduction is a goal that we're working towards, and also creating a savings account is also a goal. So those are some things that we're going to factor in here. And then just kind of some of the numbers. They bring in between $25,000 and $35,000 a month, kind of depending on the month and the seasonality of the business. This can look like $1,000 a day, can look like $500 a day, can look like $2,000 a day, but the average is between $1,200 and $500 per business day. So if you average that out about 20 days in a month that they're taking clients, it would be about $30,000. So that puts us in an average. And whenever you're working in forecasting, you are having to make a lot of estimates. And so this is kind of why I'm breaking down some of these here. So yes, 20 business days is what I had discussed. In this business, there's a high cash need at the beginning of the month because a loan payment is due at the beginning of the month, as well as rent. And we want to make sure that those are paid on time. There's also a credit card due around the same time. So we do need to make sure that there's enough cash in the bank so that there's no issues there. Payroll is paid on a bi-weekly basis every 2 weeks. Currently, they have very little cash. They do have a line of credit available for $10,000, but we are trying not to use that if we don't need to. So we're trying to figure out how we can get this business into a better, healthy operating cash flow state. They do have loans. They have a credit card that has about $22,000 on it, a loan of $45,000, and then another loan to a vendor. Well, it's an accounts payable, so they owe a vendor about $8,000. So you'll see that in the scenario. So what I want to do is I just want to start with a very blank worksheet. And what we're going to do here is we're just going to probably speed this up after the fact, but so I'm just going to start with the current week. And then to create my timetable, I'm going to do the date plus 7, and I'll add my weekly time here. And I'm going to do it. Okay, I'm going to do this. I'm going to project out when you drag and drop like this, You can project out for as long as you'd like, but we are going to go through the end of 2018. Perfect. We have all 2018 in here. Okay. So whenever you're doing a cash projection, you want to start with the beginning cash. And then you're going to start with your beginning cash balance, and I happen to know that it is $300. And then we'll start filling these numbers in a little bit. So some of the big expenses I know that they have is rent 1, rent 2, second location. They have a loan payment due. They have a credit card. Right now they're just putting interest payments on this until we can get the principal paid down. Interest. And then office expenses, we are generalizing and lumping them into one big sum for the purposes of this forecast. If you had a very specific office expenses and you knew they were on a monthly or weekly basis, you could absolutely break this down into as many categories as you wanted. The more complicated that these forecasts get, the more you need to be super detail oriented and make sure that you're checking your figures and you're putting them in the right buckets. Let's see here, total expenses. And then I'm going to go okay, so basically what I'm going to do is I'm going to get the total of all these expenses. So as I start filling in these numbers, it's going to sum here. And then I'm going to say now my operating cash flow is going to be my cash at the beginning, or actually my operating cash flow is just this plus this. And then what I'm going to do is, then I'm going to maybe say savings transfer. So after if you had extra money from your operations, you might want to put some of that into a savings. Once that is funded to a happy amount, then we will be working on our debt repayment. Let's see. I'm going to do credit card 1. The accounts payable to the vendor that I mentioned will be in here, and then I have a loan. Sum of debt payments will be those 3 lines added together. And so you would add just, if you had different credit cards on here, you would just add them into different lines. So you put credit card 1 or like the last 4 digits of them, however you identify your numbers, or if it's like a Chase credit card, or if it's a, Bank of America, whatever it might be. And then end of period cash. I'm going to insert one more line, cash after operating costs. And then that would be equals, let's see, that's that plus that. So this would be this plus this. And then end of period cash would be equals this plus this plus this. Okay, now make sure you pay attention to whether or not things are positive or negative. So if your cash is going out in this example, I'm putting it as a negative number. And then if cash is coming in, it's going to be positive. So for all incoming cash, so we made an estimate that through the end of this month, yeah, so for the money coming in for the rest of the month, we have about $20,000 coming in, actually a little bit less. I think we projected 18. So we are going to say that we're going to have 4,000 come in this month, or this week. 7,000 should come in next week, and that would be about right. So we have equals 7,000 divided by 5. About 1,400 per day. I think that's a pretty reasonable estimate based on the operations right now in this business. Okay, so I'm just going to actually start this process. So each line item basically has to have a set of, it has to have a function. So this is how this is working. So this is the current week. So let's say the current week. At the beginning of the week, we had $300,000 or $300. By the end of the week, we will have received $4,000. And actually, this is a week that there are no cash expenditures, really. We're not having to pay anything. But what I'm going to do for the purposes of this is I'm going to spread out the office expenses, just the operating costs, besides payroll. Do I have payroll in here? I don't. Key expense. Payroll. All right. Payroll does not get paid until the 25th of the month. So that will go into this bucket here. And I'm just going to go ahead and put some office expenses, since I'm going to actually spread out the cost for this client a little bit because they have so much due at the beginning of the month. What we're going to try to do is spread out their cash flow a little bit. So if they have money to pay on their credit card or to pay down some office expenses earlier in the month, we're going to have them do that just as we're getting the cash flow up and running. So for the purposes of this forecast, I'm going to try to spread the office expenses a little bit evenly over the period of the month. So I might spread it out even a little bit more. So what I've estimated is that they have about $6,500 in office expenses. They have $5,000 every 2 weeks. So I'm actually just going to spread this cost out. So I'm filling these cells. And instead of having them be a decreasing, I'm just copying them over. So every 2 weeks, $5,000 will go out for payroll. And now rent is also another predictable expense. I know at the first of the month, they have one expense. Oops, remember it needs to be negative. And then 1075 negative. Okay, so this goes out every first of the month. So remember, I'm looking up here at the date, and I'm going to find the next first of the month. So it's going to be paid this week, since it will be late on the 2nd. It's going to go out this month, or this week, this week, this week, and this week. This week, and I think actually, there we go. Okay. I can actually push out payroll as well. And we're copying those cells. So there's some basic Excel stuff here as well. All right, so also on the first of every month, there's a loan payment due, and that is for $900. So I'm going to copy that at the same time as the payroll. So for example, you see how right now, as we're starting to build a structure, July 30th, we need to plan for this because this is a lot of cash that is going to come out in one go. So this is one reason why we really like to do these forecasts. It really helps us plan so that we don't get into that really tight position and spend money when we should be saving it for upcoming expenses. All right, and I know that the credit card interest expense is due usually the first week of the month. So I'm gonna, I think this, I don't remember exactly what the interest expense is, but it's between $300 and $400. So I'm just gonna put in an estimate here. And I'm gonna move this to the first week of every month. So actually, like with this one, it probably should be there. Again, another expense that's falling in an unfortunate time. Let's see here. Okay, so I'm putting that out. And then my office expenses. So I'm estimating $6,500. This is the sum down here, $6,500 for each month because, and I'm just going to show you this. So this is about 1 month of activity. You can see that the sum is $23,225. This person's business runs at an operating cost between $22,000 and $25,000 a month. So I have this 23 in here as just an estimate. And so this is one of the things that I use, just another one of our estimates. So we know that our costs are between $22,000 and $25,000 a month. And so as you go, you might need to estimate your forecast. Like say you start hiring more people and you have higher payroll costs, or maybe you brought on a consultant or something like that. You will need to adjust your forecast for these cash needs if you have anything substantially change in your business. But this gives us a good example. What I'm trying to do is make sure that each month I'm getting my operating costs pretty close so that I haven't missed any big expense. So what I'm going to do is I'm actually going to spread out this 6,500 across the weeks. So I'm going to do, so this will put me at about 6,000. Okay. I realize that I'm starting mid-month here, so I'm just trying to incorporate a full 4 weeks when I'm trying to determine the expenses for a month. So the total of this is 6,500, and so if I try that again, I'm still at my 23,000. All right, so this gives me a pretty good appreciation and a good feel for what type of expenses I have in the period, and so I'm just going to sum those now. And I realize that I haven't pulled this all the way across. Not all of these expenses have been pulled across. So remember, I'm doing a quick forecast. This is not intended to be perfect. It's intended to show you part of the thought process and some of the things you might need to consider for your business. Okay, so these are total expenses. I'm going to go ahead and just put a little border on that so that it lets us know that that is a total. All right, and then this is saying operating cash flow. So this is just cash flow coming in, cash flow coming out, and then total cash takes, so incoming cash was 4,000 minus the 1,500 for office expenses gives us an operating cash flow of 2,500 plus the original 3 that was up at the top. And then what I'm actually going to do for this business is I am trying to put, we're trying to put a little bit of savings in the bank. So we're going to just transfer 2,000 of that from operating cash flow over into savings, just to kind of give us a little bit of a buffer. And another thing that I like to do on these forecasts is I like to create some balance trackers down here. And then here's the loan, and then here's our savings account. So what I like to do is I will say, so let's say the balance on the credit card is negative 22,500. So what I will do is I will take that balance that's on the credit card, and then I will do a formula to add in whatever we repay. So if I was repaying negative 500, oops, that means I have a formula wrong. It used to be negative. Okay, so at the beginning of the period, my balance would be 22,500, but if during the period I paid $500 on the credit card, it would bring the balance to the credit card as down to 22,000 even. And then I will, the next period, I will use this formula and then just drag that across. So that way, if let's say in, the beginning of June, I have a lot of money and I want to pay down the credit card, I can do that. And I can plug in a $10,000 payment and then see what that does to my balance on my credit card. and it will also roll into my my cash projection. So it helps this all be a little bit more dynamic. So I'll get there in just a second. Let's see. So let's pull across. This just copies my formula so that you know, this one is operating the same as this first one that we set up, and then same here. And let's see here, what else do I need to do? So I need to connect. So this is the end of period cash. I'm just gonna give that a little bit of a shading, and then the beginning of the period of cash. Okay, so if this is the end of period cash, let's see if that's right. 2,800 minus 2,000 minus another 500 gets us back to 300. So then I'm going to, and actually I would probably not pay on the credit card in this situation because $800 is a pretty low cash balance. And I know that this next month I've got more cash coming in, so I'm gonna just wait a little bit, and I know that I have some expenses to come up. So I don't want to get in a cash negative space just yet. Okay, so this cash at the beginning pulls from this end of period cash here. So let's make sure that's dragged across. And then is this one dragged? Let's check, make sure that one's good. All right. And so you'll see that this is going to be summing these lines and so on. So, all right. Now this cell is pulling from the end of period cash from the period before. So we're going to drag that across as well. And then we're going to start having a pretty dynamic spreadsheet. See, this one is pulling from this cash balance. Okay. So you'll see, oh no, we're at $164,000 in negative cash. Aha, but we have not populated the incoming cash yet. So I'm going to just drag across the $7,000, mostly because just for ease of projecting right now. If you are a business owner, you would be able to more dynamically estimate these, the incoming cash, and this would be based on your business. This would be based on, you know, the types of things that you have going on, seasonality, blah, blah, blah. But this would all need to be looked at on a regular basis. You wouldn't just assume a flat $7,000 every week. That is usually not how it is. Okay, I'm going to just change the formatting of these numbers to make it easier for me. I like it to be in a decimal point with a nice little comma, and I like my negative numbers to be in parentheses for the purposes of these, for the purposes of this worksheet. So this is where we have this pretty dynamic thing built now. So what we can tell is that this is how you would read this. So you start with $300 at the beginning, you add in your cash that's coming out, you pay for things that you need to pay for during the week, and then you can say what you have left over. And then you know what's in the bank, at least an estimate of what's in the bank. And then you can transfer things to savings, or you could use that money to repay debt. Maybe you don't want it here. Maybe you already had a savings account that's not listed on here, and maybe you want to put that towards your debt, which would then affect your credit card debt balance down here. Let's see. Okay, so then that gives us end of period cash, and then that rolls up to here, and we start the period over again. So $7,000 comes into the business. $5,000 goes out for payroll that week, another $1,500 for office expenses, and then you really don't have a whole lot left over from operating cash flow this week, $500. So that gets added into your operating cash flow, and you decide that you don't want to do anything with that money because you look next week and you realize you have to pay rent. So, so then we start the month with $1,300. We get $7,000 more. We pay rent, we pay the loan, we pay some office expenses, and then we actually go a little bit negative in operating cash flow, which brings down our bank balance a little bit lower. So you can see how this starts to work, and you can see where this starts to really help you think about the future. So what I really like about this is that this can help you plan any significant investments in your business. You can plan some marketing. You can see where you, like if you had a piece of equipment you needed to purchase, that was a significant investment, you could do that. If you're trying to pay off your loan and you're trying to determine the timing of it, this is also a good thing. Like I'm starting to see some pretty positive cash flow come the fall of this year. So that's encouraging me. I think that this is going to be able to really pay down some of this credit card debt, which is exciting. All of that is definitely riding on the fact that this incoming cash will stay high. So for June, I'm projecting, $28,000 of revenue. So if this projection changes and all of a sudden this business owner is bringing in $35,000, then it changes the picture. You start changing these projections, and then this will dynamically change. So this is why I just love a cash projection worksheet. And I just think that these are super helpful. So if you ever want help creating one of these, this is something I absolutely love to do. I would love to help you with that. You can find me, you can book a consultation through, I think, on my YouTube channel. It's also in my email signature. So if you want to email me, my email is hannah@brightenupfinancial.com, or you can just find me at brightenupfinancial.com. And I would love to help you with this. And hopefully this has been a helpful tutorial.